Hey guys, I'm not gonna be starting with the usual what's good because with what's going on in Ukraine, honestly not much is. That being said, I do want to start off by saying that in this video we're gonna have a look at what the markets are doing and try to understand whether or not we have seen the worst of it and the market bottom has been dealt with and we're gonna potentially move back to previous highs. Before we do that, guys, though, I do want to encourage everybody, don't subscribe, don't like this video, just do your best to donate or do your best to support the cause. Get out there on the streets and protest, do whatever is needed. Honestly, help those guys out. It's a huge injustice what's going on, and I'm gonna keep it at that for now. So let's have a look, guys, into Webull at what the indices are doing and what we can expect moving forward. So we're gonna be looking at QQQ first, guys. So this is the Nasdaq, obviously, as you guys well know, and I do want to have a look at first off what went down this week. It was a pretty intense week. Obviously, we had an especially crazy day where we started off at -3% roughly and ended the day at +3 or 4%. So with that said, obviously that was a pretty intense day. The thing is, guys, that we have pretty bullish signs right now. On that day we had a huge bullish pin bar here, and then on the very next day we had another bullish bar that ended above the previous day's one. So honestly, I feel like this is a pretty great indication. Now, I do want to preface what we're going to talk today by saying that I do expect next month's CPI index report and then obviously the Fed meeting to be ultimately the one deciding factor. This week has turned out to be pretty positive despite Russia attacking Ukraine. Positive in the stock market, I mean, of course, because we received some confirmation from Goldman Sachs that the likelihood of having a bigger basis point increase on inflation from the Fed meeting has diminished because of the Ukrainian crisis. So let's see what happens next month, guys. I'm not gonna call a market bottom yet until we see what the first Fed meeting is gonna bring. That said, from a pure technical point of view, guys, it's pretty great that we had support here. Honestly, if that one day wouldn't have happened that way, I was pretty much expecting this, the $300 mark, to be where potentially we would have stopped. I'm pretty happy to see that we were able to stop sooner. So let's have a look at the weekly chart here and see if the weekly confirms what we saw on the daily. And honestly, it does. Beyond the fact that we have this previous resistance now turned support line at roughly, what is this, roughly 342. We also can see the fact that we now have a pretty interesting bullish pin bar over here. Just check out the stingray on this puppy. The fact that there were so many bulls to bring the bears down and just make sure that we push this back up has been so impressive, and the fact that we are now, it's not quite engulfing, but it was almost there. We missed this pin bar being an engulfing one by a couple of percentages. Yeah, guys, with that in mind, I think that we will be moving back towards a more further away from the market bottom here, but don't go too bullish on the market because honestly we never know what will happen next month. Now that's for the QQQs, guys. Let's have a look at the S&P as well. So for the S&P, honestly, the bullishness is even more significant. And as you guys can see, I already had this $395 support line drawn here. I was expecting this to be the next stop, basically, on that one interesting day where we went down massively and then back up. But again, it's the same pattern. The fact that we were able to move back higher above the 300-day moving average initially, and then even the 250-day moving average, and now we're also above the EMA, which is this teal one that we can see over here. Pretty encouraging signs all around. We basically have confirmation of highs right now, so it's really interesting to see what will happen in the next few days. On the weekly for the S&P, we can see the same exact thing, guys. Such a huge pin bar forming over here for the past week. It was not engulfing, and we are not yet above either the EMA on the weekly or the 50 moving average on the weekly, but still pretty significantly positive signs considering what the first half of last week was feeling like. So with that in mind, guys, what am I planning to do and what do I recommend? So first off, I would not do too much bullish activity right now. I do suspect that part of why the market has been so bullish in the last couple of days has been due to a lot of short covering. Honestly, I was actually reading throughout the first 3 days of the week that we have an unprecedented amount of shorts on the market, and that's because people were trying to hedge. There were a lot of puts being bought so that they could hedge the positions that they were having, and then we saw the reverse of that, where folks moved out of their put position, and then the market makers were forced basically to buy shares to cover for those puts. So with that in mind, again, moving back, and let's have a look at what we could potentially be looking at here, guys. So the one first stock that I wanted to talk to you about was Adobe, guys. For Adobe, we now have, it's kind of the same. It's pretty much a mirror image of what we saw on the S&P for the last couple of days here. But as you guys can see, this support line over here at 441 was a pretty significant one for them, and now we are moving higher up. If we look at the weekly for Adobe, it's gonna be a very interesting support, and you can see that the 150-day mark here was such a fantastic support for the stock. And then obviously we bounced off of 440 so many times before throughout the last couple of years, really. So with that in mind, what I would do here for Adobe is, obviously if you're into options trading, I would probably just settle for a bull put spread right now. I feel like that would be a great trade. If you're not, just use common sense, guys. Let's say we are gonna enter here with a long share based trade. We are gonna want to have a stop loss over here at, let's say, 430, roughly 8% of a downside. We can make roughly 48%, so easy 6 times while we're losing. Obviously take profit, I would say it would be ideal if we can get 537 range, so roughly 15%. That gives us double what we're losing, so it's a good risk to reward ratio. Now the second one that's really interesting that I want to have a look at with you guys, actually I do already have a bull put spread on Microsoft, where the short leg that we have here is, I believe, 285 for Microsoft. And actually it was quite painful to watch Microsoft throughout the week because it spent so much time very near to this 285, and my option is expiring next week. So I was honestly considering taking the loss on it, but it moved higher up here. It's at, what is it, 297 right now. So again, with Microsoft, it's kind of the same situation. Really good solid position on the daily, really good solid position on the weekly as well. You can see the very clear support line here. And what I would personally do right now with Microsoft, guys, would be exactly the same. Let's say we take a long trade. I'm gonna stop loss here at 286. That's gonna make a 4% loss, and then we have the opportunity to make a whooping 15% back. So if we take the one loss at, let's say, 4%, and we're gonna take 2 hours, or let's say 2.5 at roughly 10%, we can have the take profit realm be roughly $329. Guys, these are two of the really interesting ones that I've been looking at. The third one really is Intel. I know it's not the best momentum stock right now because of everything that's been happening, but if you guys have a look at the weekly range here and tell me that you're not seeing a pattern, you need to be blind as a bat not to see this pattern, honestly. And I feel awkward even bringing this to you because it's such a clear one. But yeah, $45, $46 roughly has been a support line so many times before. It's incredible, really. And we're in the same ballpark again. So doing sort of a similar thing for Intel here. If we have a look, if we buy now, we have a stop loss right beneath it. It's 6%, and we can make, let's say we take profit here, it's gonna be 16%. So we're easily gonna make almost 3x what we potentially could lose on the stop loss. Remember, when you're trading, guys, always have a stop loss, always have a take profit, always have a plan to go in with. If you don't have a plan, you risk getting too caught up in the action, too caught up in the days, in the news, in everything. So just make sure that you have a plan, guys. This is all for today. If you found anything useful in this video, please drop a thumbs up, please subscribe, and I'll catch you next time. Take care.